All right, well, welcome to the Connors Report. Happy Thanksgiving to everyone, and hope you and your family have a safe and festive holiday. This is a Connors Report, and for those of you that are new, in the Connors Report, we discuss the economy, the markets, and a few mega trends that will disrupt everything, including our careers, our money, and our lifestyle. So today we have a review of the current economic and market metrics, and then we'll spotlight a few important megatrends that will affect our economy through the rest of this year and into 2022. Okay, so for those of you that might be new, we've been talking about some key themes that have transpired over the last year and a half since the beginning of COVID that are kind of driving what is happening now and where we're going in a larger context. And those are self-sufficiency, assets and liquidity, automation, virtualization, decentralization, analytics, and exponential thinking. With exponential thinking probably being one of the most important because that is where we're really seeing some major disruptive change going forward that's going to really affect everything we do. A quick review of the macro and economic and market trends. So we just recently passed the 1.2 trillion infrastructure bill. That's going to have some major ramifications on the broader infrastructure and should create many, many jobs for a lot of people. So that's a good thing. We'll talk a little bit about that. We're starting to see some signs that we're going to see some accelerating growth in the fourth quarter. I think we had a little bit of a soft patch in the third quarter, but we're seeing some evidence that a lot of spending is occurring, obviously because of the holiday season, seasonality, as well as just that generally people are finally feeling more comfortable about things going forward with the economy seemingly to recovery from the post-COVID pandemic. Inflation is becoming increasingly real. We'll talk a little bit about that. A major shift that's going on in the economic arena is the Fed has now started on the process of taking away Fed accommodation, which is a complex idea, but essentially it's the amount of money that's floating around in the system. That's going to have ramifications for us, particularly for the markets in 2022. Still dealing with major supply chain disruption, as you might have seen if you look out in the harbor of Long Beach and LA. Still a lot of ships that cannot seem to dock and basically unload their goods. So that's a continuing problem that's going to be disruptive going into 2022. We did have a little bit of lower consumer sentiment in the third quarter as some of the stimulus checks were wound down. People do still feel a little bit uneasy about the future. Rightfully so, with many uncertainties out there. And we'll talk a little bit about the ubiquitous computing and communications trend, which is really transforming everything that we do. A major notable event occurred about a little few weeks ago. The EV market now is more valuable than the internal combustion engine market. I think if you add up three of the largest players, Tesla, Lucid, and Rivian, which are some of the largest companies in the space, their total market cap is somewhere like $1.15 trillion compared to Ford and GM. You're looking at something like 180 billion. So there's a major disruptive trend in that space. And now we're also looking at a 2 trillion infrastructure bill that is in Congress and potentially maybe see something, if not before the end of the year in 2022. Okay, quick review of the numbers on the economic metrics. Yes, as I mentioned, we're looking at strong potential growth this quarter in the fourth quarter. Into 2022, economists are projecting something about 4.2% growth, so the economy looks in good shape for the next 12 months. We are seeing lower unemployment, which is a good sign, but we are starting to see the beginnings of rising wages, which is a little bit of a concern. It's good to see people spending and getting more money in terms of income. The problem is it's ahead of the curve in terms of where the Fed has targeted inflation. So that is a reason for some of the change in Fed policy. And the concern about that would be that if we have a spiraling of wages going up, that is going to be a problem in terms of whether or not inflation could be transitory, which some people still like to believe is going to be the case. One of the other key numbers there is the oil's futures price, now over $78. That is a problem. Oil is such a big part of our economy in terms of the goods and services produced as well as for transportation. There's not a lot of signs that that's going to recede very soon. So we might be dealing with some higher inflationary numbers just because of that alone in 2022. Last number that is kind of worth keeping an eye on is the ISM Purchasing Managers Index. That is a barometer of growth. That's a good sign. It's above 50, which means we're probably looking at reasonably good growth for the next 12 months. As I mentioned, inflation is increasingly a problem and is probably more real and not transitory like many of the economists might be currently telling us, including the Fed. If you just look at the price of fuel, oil just went up 12% in 1 month alone. That's a very significant jump. And there's evidence that that's not going to come down anytime soon, may even go north of $100 a barrel, which could increase more of the inflationary pressures that we're already witnessing. But if you look at everything from the grocery store that you might be shopping at, food at home, electricity, utilities, cars, medical care, shelter, those are all important areas where people spend money, particularly to people that are kind of on a fixed income. So that's a bigger concern and something that the Fed's going to have to deal with as we go into 2022, which I'll talk a little bit about next as we get into talking about the market. Just a quick snapshot of the supply, oil supply. If you look at the numbers between last year and this year, it's a notable decrease in supply, a notable decrease in the days of supply. Particularly one of the areas, if you see Cushing, Oklahoma, that's where they were supposed to have the Keystone Pipeline bringing oil from the oil patch up in North Dakota and Canada. So we're seeing some particular problems in trying to get oil and gas to the parts of the country that need it most. Okay, so now just an overview of the market. The market, by all measures, we've had a fantastic year. Look at the profits, S&P profits almost 40%. No one would have thought probably that we'd have the S&P close to 25% year to return. Profit margin extremely strong. We've seen some transition now to the cyclicals, which is financials and energy. But all in all, I mean, if you look what we've been through in the last 12 months, we've had a phenomenal year. The problem we have now going forward is that with Fed accommodation changing, we're kind of at a critical juncture that we're going to probably see a divergence between the markets and the economy. And if we just take a look at, the leadership of what is happening, we're starting to see the broader cyclical parts of the economy outperform the, what we call the high growth, high beta sectors of the market like technology. So basic materials, obviously tied to supply chain issues, energy, supply chain, financial services benefits from higher interest rates. And we're expecting to see higher interest rates going forward. We're already starting to see a little bit of change on the short-term end. But the biggest fact about this is to consider is that we're going to see probably a divergence now between what's going on in the real economy and the markets. If you remember back in 2020, we had a very big disruption to the economy by the COVID pandemic. But the markets sensed the quick recovery around March 23rd, if I recall, or March 26th. And from that point forward, took off, particularly with the growth sectors of technology, healthcare, and communication services, pretty much to a surprise of many, because we were at that time talking about, a lot of mortality and everything else going on with the pandemic. But the market sensed the quick change because of stimulus and monetary fiscal policy. Well, that is changing with the Fed change now. And so what we might see in 2022 is we're going to see potentially a very volatile market going forward in the next 12 months. But the broader economy will do fine. What does that mean for you? Well, if you're retired, if you're on a fixed income and you're relying on your investments, you need to be taking stock of where we are now and reassess things. If you're working in maybe your younger generation, potentially the millennials, this is a good time for you because the economy is strong and we're going to be moving forward with some of these disruptive technologies that we'll talk about in a second. So one of the first major disruptive economic trends is the recent passage of the 1.2 trillion infrastructure spending bill. A lot of money there, as you can see, in the different things like roads and bridges, passenger freight travel. But some of the ones that really could have long-term implications will be what's going on in the broadband infrastructure, the electric grid, where there has been money allocated to those projects, but also to electric vehicle charging stations, some of the things that are going to support some of the new technologies going forward. So this will hopefully help us a little bit to sustain growth despite some of the concerns about what the Fed is doing in terms of monetary policy. Okay, so the first major technology trend, and that's been a trend as we've talked about in previous discussions, is this ubiquitous computing and ambient intelligence trend. This is gaining steam, and if we're starting to finally see the real convergence of digital and communication technologies based on what we call the law of convergence and the law of accelerating returns, where each of these technologies is kind of increasing like in a flywheel effect to increase the development and the speed of adoption of some of the other technologies. And as the Microsoft CEO, Satya Nadella said, we're moving into a mobile and cloud era, to an era of ubiquitous computing and ambient intelligence. This is going to be real in terms of everything. If you look at the way you do business, in terms of the speed of the internet, the way we do e-commerce, infotainment, digital streaming, and now the future, which is going to be electronic vehicles. So a lot of spending going on there. Is going to probably consume about 45% of the IT spending, up for 17%. The other major area in that space is the semiconductor market has enormous growth trends. There is a supply chain shortage in semiconductors affecting the automotive market, but tremendous growth ahead in particularly semiconductors, because just about everything is now going to be connected, interconnected, and some kind of intelligent device. Just a quick look at the numbers on that. You're seeing growth across all the cloud areas, process services, infrastructure services, application services, management and security, infrastructure as a service, and desktop as a service. So very major growth there that should support economic growth in technology and an economy going for many, many years. The real exciting space is in what we call the intelligent edge. This is the edge where we get into edge computing, fog computing, where we're really looking at technology now moving where we need to be able to have low latency times to communicate, particularly for electronic vehicles and that kind of semi-autonomous and autonomous driving. That is coming up fast. If we look at the growth rates there, from where we are, a little bit, maybe around 5 billion to maybe 10 billion, depending upon what you look at. That over the next 6 years looks like it's going to rapidly grow to potentially 70 trillion in the near future. What does the edge look like? Well, the edge is think of it as a lot of sensors, electronic vehicles, robotics, etc. And then we move into what's needed for that. We need high-speed digital infrastructure, software, and connectivity. And then that goes up into the main cloud where for storage and more interaction. And this is just a little model of what looks like on the logistics for transportation on an edge computing, where we have the sensor layer, the edge computing node, the cloud platform, and then the smart application platform. This is going to be a huge place for investment and opportunity for anybody that's looking at that space. So those can kind of conclude my thoughts for today. I wish you again a happy Thanksgiving, and I'm going to turn it back to Bill.